All right, let's talk about the Sacramento housing market. For the last few years, it's been, well, a wild ride, to say the least. But it looks like the music has finally stopped. Today, we're going to dig right into the data, figure out what happened during the big cool down of 2025, and, most importantly, what it all means for you, if you're even thinking about buying or selling next year.
So, if you're one of the many people who's been kind of sitting on the sidelines just waiting for the right moment to jump in, guess what? You're not alone. But the thing is, the market has shifted, and I mean dramatically. All those old rules from the crazy bidding war era, yeah, you can pretty much throw those out the window. So let's get into what's really happening.
Okay, I want to start with just one number. One number that tells a huge piece of this whole story. Ready? 46%. By the spring of 2025, that's how much the number of homes for sale in Sacramento jumped in just 1 year. That's not just a little change, folks. That is a seismic shift.
And that explosion in the number of homes for sale, well, that's really the first big piece of the puzzle here. It's what set the stage for the entire market cooldown we saw in 2025. I mean, the whole year was defined by this really simple dynamic. A ton of houses hitting the market, but just not quite enough buyers ready to snap them all up.
So if you had to boil down the story of 2025 into one sentence, what would it be? It'd be this. Inventory absolutely soared, but the actual number of sales kind of lagged behind, and prices, well, they pretty much stayed flat. The unstoppable climb we've gotten so used to finally hit the brakes.
And check out this chart, because it tells the story perfectly. That light green line, that's the number of homes for sale. You can see it just climbing and climbing all year. But then look at the dark green line underneath it. That's the number of homes that actually sold. See that gap between them getting wider and wider? That right there, that's the whole story of 2025. It's the visual proof of power shifting away from sellers and back to buyers.
Okay, so with all these extra houses on the market, you might think prices would have just cratered, right? But that's not what happened at all. If you look here, the average price per square foot, it peaked around the middle of the year, then kind of just drifted back down. It ended 2025 pretty much exactly where it started. This wasn't a crash. It was more like a much-needed correction.
You know, there's a term that analysts use all the time to check the pulse of a housing market. It's called months of supply. And it basically answers one simple question. If nobody listed a new house starting tomorrow, how long would it take to sell every single home that's currently on the market? Well, in the spring of 2025, that number hit 2.6 months. That's a 52% jump from the year before. A huge leap, signaling that the market was becoming much more balanced.
And this chart right here just drives that point home. I mean, look at that upward climb of the months of inventory line. It's totally unmistakable, right? This is the picture of a market cooling off. It's the story of power slowly but surely shifting back into the hands of buyers, giving them more choice than they've had in a very, very long time.
So, this big shift wasn't just some abstract number on a chart. No, it had a huge, real-world impact. It changed the entire dynamic between buyers and sellers. It really was the end of an era. The end of the crazy bidding war era.
I mean, think back to 2021 and 22. Remember that frenzy? The crazy competition, homes selling for tens of thousands over asking. It was nuts. Well, 2025 was a totally different planet. For the first time in what felt like forever, more homes actually sold below the asking price than above it. I mean, nearly 46% sold below list. That right there is a total game changer.
And if you need more proof, here it is. This chart shows us the days on market, which is just a fancy way of saying how long a house sits for sale before someone buys it. Just look at how those blue bars get taller and taller as the year goes on. By November of 2025, it was taking nearly 30% longer to sell a home compared to the year before. Sellers, for the first time in a while, had to learn a little thing called patience.
So what did all this actually mean for people on the ground? Well, it meant the median time to sell a house stretched out to about 20 days. It meant sellers couldn't just name their price anymore. They had to get creative, offering concessions like price cuts or helping with closing costs. And that median sale-to-list price ratio, it hovered right around 100%, not way above it. The bottom line is buyers finally had some leverage again. They were back in the driver's seat.
Okay, so we've seen what happened. We've seen the numbers. We've seen the charts. But the really interesting question is, why? What was going on behind the scenes to cause this big cool down? Yeah, no big surprise for the number one reason, mortgage rates. I mean, they were the elephant in the room. While they did come down a little from that crazy peak in 2023, the average for 2025 was still hovering around a pretty tough 6.5%.
We're talking more than double the pandemic lows. And that puts a serious squeeze on affordability.
But, and this is where it gets really interesting, it wasn't just about interest rates. While those high rates definitely put a chill on demand, Sacramento had some unique, powerful forces at play that acted like shock absorbers, preventing the market from taking a nosedive.
So, what were these stabilizing factors? Well, first off, the job market in Sacramento stayed really healthy, with unemployment holding low between 4 and 5%. Second, that migration from the Bay Area, it didn't stop. People kept moving to Sacramento looking for more affordable homes. And third, and this one is huge, we saw a massive surge in new home construction, the highest in 20 years, which really helped meet that demand.
And when I say a huge surge in construction, I mean it. Just listen to this number. In 2024, leading right into the year we're talking about, the region saw about 12,500 new housing units completed. That's the most we've seen in 20 years, and it played an absolutely critical role in keeping things from going off the rails.
And it's not just a one-time thing either. The region is looking ahead. There are new local policies coming online, like the 2025 Missing Middle Ordinance, which is designed to boost housing supply even more. It's all about making it easier to build different types of homes to fill in the gaps.
Okay, so that's the story of how we got here. We've looked back at 2025. Now for the big question, what's next? What can we expect for 2026? Well, the term that all the analysts keep using is a soft reset.
A soft reset. Get used to hearing that phrase because it really captures the forecast for 2026. It doesn't mean a boom, and it definitely doesn't mean a bust. It suggests something, well, something more stable, more predictable.
So what exactly is a soft reset? Well, think of it like this. Mortgage rates are expected to ease up just a little bit. That's going to bring some buyers who've been waiting on the sidelines back into the market. But, and this is key, that elevated supply of homes we've been talking about is going to act like a ceiling, keeping prices from shooting up again. The end result? A market that's way more stable and predictable.
And the forecasts from the big players all seem to point in the same direction. I mean, look at this. Redfin is calling for about 1% price growth nationally. Zillow is saying maybe 1.2% for California. And right here in Sacramento, most analysts are saying prices will probably be stable, maybe even a little lower. We're not talking about any big, scary swings here.
So let's break down the takeaways for 2026. What does this all mean for you? Well, if you're a buyer, it's good news. You can expect more choices and you'll still have some negotiating power. If you're a seller, it means pricing is going to be absolutely key. You'll need to be competitive to get attention. And for the market overall, just think slow and steady. Gradual sales growth with flat to modest price changes.
And all of this brings us to the final big question, doesn't it? We're walking into a market that offers more choice than we've seen in a long time, but high costs are still a very real hurdle. So, in this new, more balanced world, what is the right move for you? That really is the question on everyone's mind.